moderated by Winny Patro, Recordent, and the panel we have Ketan Gaikwad, RXIL, Manoj Verma, Lyra Network India, and Sundeep Mohindru, M1 Exchange. Requesting all our panelists to be on stage, please.
Hi everyone, very good afternoon. It looks like we are one of the last sessions. Oh, that's quite a difficult job. So I'm your moderator for the discussion on Receivables 2.0 Makeover. So I'll start off with sort of setting the context of the discussion, then I'll probably ask everyone to sort of introduce themselves. So we've been talking about, I think in the previous session was focused on B2C payments. And more than anything else, we've seen that last decade, like 2010 to 2020, there's so much disruption. And then payments, especially in the B2C space, have transformed the landscape forever, right? Thanks to, in fact, COVID, that in the last, like the last over IPL match, the last year, 2020, had seen the upsurge of, making people push and force towards adapting the digital payments, right? But I think we strongly believe, I think the time has come for all those entrepreneurs who had experienced B2C payments in their own lives, in change. They all obviously started thinking, being very enterprising people, they started thinking, how do they make difference in their own businesses? Like, for example, a small entrepreneur who runs a 5 crore business, who had now experienced the technology behind the payments and the way it works in the B2C space, have definitely started thinking, how can he sort of start using it in the B2B space? There we are here. We have two people sitting here exactly in the middle who's sort of pioneering the change that is very much needed in the B2B space. We have two people representing the Threads platforms. And most importantly, we strongly believe, all of us sitting here strongly believe, that this decade will probably change the face of B2B payments and B2B tech platforms, enabling payments and changing the landscape for receivables and delayed payments forever. With that note, I'll start the session by making each one of them introduce themselves. My name is Winny Patro. I run a credit to cash management platform for SMEs, and we've been a part of IIMA for 3 years now, and then we've been in the business for the last 3 years. And over to Ketan.
Yeah, thank you, Winnie, and thank you to the PCI for holding a discussion, which is very important on the receivables purchase. So this is Ketan Gaikwad. I run the Receivables Exchange India Limited. It's a joint venture of NSE and SIDBI, and yeah, so this is basically a delayed payment portal, or rather I would say, how do we enhance or expedite the payment for the MSMEs, the B2B payments. So that is something which we have been working on. So yeah, so this is what my introduction is.
Thank you. Good afternoon, everyone. This is Sundeep Mohindru, representing M1 Exchange, which is one of the Threads platform, like Receivable Exchange. And like Ketan said, we finance the receivables of SMEs who are giving services and goods to their large corporates. One of the uniqueness about Threads is that this is completely on non-recourse to the SME, and the banks are bidding to buy the business. So that's a uniqueness, and yes, we'll engage more as in the session.
Hi, this is Manoj Verma. I'm representing Lyra Network. We are a payment solutions company and a payment gateway. We enable merchants to accept payments, and with the Receivables 2.0, we want to see UPI moment in this particular segment, which will happen in coming days. This is what we see with the efforts made by all the participants, ecosystem participants.
Thank you for your introductions. I think I'll start off with the fact that how Threads has sort of led the change, right, with its introduction in the B2B space. I wanted to start off with both of you. Maybe start with Ketan. What has been the journey? Especially, you started off with definitely challenges and uptake. What is it now, right? And how do you see it going forward?
Yeah, when you talk about receivables purchase or receivables financing, I'm a banker, so I've been there in the banking industry for the last 25 years plus, and then I joined Receivables Exchange India Limited. So when you talk about receivables financing, this product never existed. So I would say that, look, it's a innovation of its kind for the financial inclusion for the MSMEs. So when you talk about the receivables purchases, when you talk about a receivables purchase at a bank, you need to have that, the seller above a certain credit grade. Then only the banks will touch it. But here is something the government started it. It was worked upon by SIDBI, NSE, and many people over there in RBI. And they worked upon a platform called as NAFIN in Mexico. And they said we should need to have something platform over here in India. And that's how the platform came into being. That, we should be tackling the delayed payments for the MSMEs. So this is a very unique platform, in the sense it doesn't exist anywhere in the world. And we did represent as a part of a innovation during the G20 also in one of the 2-3 conferences for the government of India. So when you talk about receivables purchase, it's a non-recourse receivables purchase program for the MSMEs. The journey has been, I would say that it's an exciting journey. And as you correctly pointed out that, the movement towards adoption of the platform started during the COVID times. So, actually we have seen the platform grow multiple times during the COVID times, because that's where the corporates found it necessary to support the MSMEs, because when you talk about the supply chain financing or the supply chain for a particular corporate or any corporates, your supply chain is as strong as the weakest link. And sometimes the MSMEs form the weakest link. So if that weakest link were to collapse, the whole supply chain can collapse. And that's where the corporates started realizing that this is something which we need to adopt. And we have seen the greatest uptake during the platform, during the COVID times. And then the journey has been good. So I always end up telling people proudly that, look, in 2019-20, when we were just talking about figures, we were doing around 2,000 crores plus per year, 2019-20. Our company, we closed around 2,300 crores plus in a per annum basis, the financing which is done. 22-23, we finished with 25,000 crores plus. So that's the journey, and what we were doing 3 years back in a year, today we are doing in a month or more. And this year the target is more than 50,000 crores. So you can imagine what kind of growth has happened. I would leave it to Sundeep now.
Yeah. So of course, Ketan has explained the upward journey. One point just to amplify is why did it take off post 2020, or when did it start taking off post 2020 is like when all the stakeholders in the ecosystem started benefiting from it. So in the initial period, it was seen as if this is an MSME platform only. And the large corporate did not really find any sense in participating in it and committing a repayment date. So it was in 2020 that the large corporate started benefiting from this platform. More so when the definition of SME was revised to 250 crores. So the substantial part of the purchase of a large corporate started to come from an SME as in the business sector. Today, when you speak to a large corporate, he says that his cost is coming down because his inventory holding cost has reduced. Why his inventory holding cost is reduced is because he has passed on the trust and confidence to his suppliers that he's going to make payment on time, because the invoices are getting discounted and they get the payment immediately. At the cost, which is his working capital cost. That means the buyer's working capital cost. So there's no additional cost for the buyer. Now, because SME is getting the payment instantly, he's ready to supply more and more. The trust is there, and he's ready to supply instantaneously. Earlier, he used to give preference to the buyer who makes the payment early, and second preference to the buyer who used to demand 90 days, 180 days, or who used to delay the payments. Now, all the delayed payment buyers have come into the category of preferential treatment with the SME. If they have come in the SME preferential treatment, so obviously the SME supplies instantaneously, the buyer doesn't need to stock up anything. earlier they used to be worried about disrupting their business, that the suppliers will not supply. I need to have an inventory of 2 months, 3 months in my warehouse. This was a very, very pleasant change. Nobody purposefully changed it, but the logistics drove it because the money is getting paid to the supplier immediately. Now, if as a buyer, I am getting the same cost as my working capital, A, B, I don't have to stock up, my supplier is coming forward and asking for more business rather than pushing me, because now, post-corona, the market has become suppliers market. So there is a shortage, more suppliers are needed, most of the buyers have extra orders. So because the large corporate benefited, the adoption went up and the numbers are speaking for themselves.
Thank you, Sundeep and Ketan. On that note, I'll just move on to Manoj. So Manoj, of course, you've observed Threads as one platform sort of that led the change in terms of the transactions, right? But there has always been, there's a gap, right? When you talk about a B2C payments and trying to translate the same into a B2B, the major challenge here is the high value transactions, right? You can't have UPI for high value transactions, right? Especially when it comes to B2B part of things. How do you see the technology coming in actually, solving the problem of speed and transactional time when the B2B payments come into picture, right?
So if you see, a lot of innovation has happened on the P2P side, so P2P after UPI emergence, the payment is instant, because the payment is instant, everybody in the ecosystem is very happy. And even if you see P2M, the payment cycle is T+1. But in the B2B segment, it is 45 days, 60 days, 90 days, etc. So this is the big challenge that we need to solve. We need similar payment cycle in the B2B side also, because if enterprises are able to churn more money, reuse more money, one after the other, same money if they can use repeatedly, that is what will impact the growth of the economy. So this cycle we need to reduce. So with the emergence of GST and the unique invoice number generation, which has happened with GST, etc. So this will also help now to link all the invoices, buyers, sellers uniquely, and payment should happen automatically with the invoices between the entities. This is what people should try and work on this side, where it has to be automated, and it need not wait for 30 days, 60 days, or for some intervention also. If the trust is there and if invoice is clear, everything is satisfied, it has to move automatically. Invoice clearance process should happen automatically. This is what we should try to target.
Yeah, as you're speaking, in fact, I was thinking about sort of a possibility in the future. Is there a way? I mean, is there a possibility that you foresee Threads platform becoming a sort of a payment gateway for all payments? Is that something that you foresee?
Yeah, very interesting. What you said about the GSTN and the invoices and all that. In fact, we are adopting that particular thing, that that particular development. That there is a work going on where how we can integrate with the GSTN. So the moment the invoicing is done, whether those invoices can be pulled into the Threads platform. So that is something with whether that can be, because the moment you have it from the golden source, that something can be done about whether we can accept it, whether we can do the discounting of that particular thing over there. That is one thing. But at the same time, we are also working with GEMS platform to see whether the Threads can become a payment mechanism. So a sort of a payment aggregator over there. So wherein when the payments when the procurement happens on the GEMS, that the payments are different mechanisms which happen over there. So whether that can be looked upon. So we're working with the GEMS portal to see whether that can become, the Threads portal can become GEMS payment supplier, or I would say the payment aggregator. So tomorrow when the GEMS, when the CPACs or the corporates when they do the order, the payment can be, one of the mechanism can be through Threads portal.
Then that will be a great development. In fact, there'll definitely be a paradigm shift in the way the payments will be done. Sundeep, I have some pointers. In fact, there was this article I think in the Financial Times, right, July last year, where Niti Aayog clearly mentioned that the trend has not taken off as it is expected. That is point one. Point two is that Economic Times had reported about last year, the entire problem of delayed payment is about 5 lakh crore rupees in India. So on these two reports, of course, in the earlier report, I knew that you commented for the same newspaper, but I wanted to ask you here about the same thing. How has it been ever since you commented? Point one. Point two is, with Economic Times 5 lakh crore delayed problems that they're quoting about, how much of the percentage the TREDS is solving?
So, April 22, March 23, all three TREDS platform have done 75,000 crore worth of delayed payment financing. Now, this is not delayed payment. I mean, this is payment on time or before time. So, actually speaking, TREDS is meant to finance in a manner that the payment is not delayed, it's paid before time. Okay? So, we call it tomorrow's money today. Having said that, this 5 lakh crore market is comprising of government business and non-government business. Non-government business is today on TREDS is occupying almost 90% of the market share in terms of the total business that is getting done. 75,000 crore, non-government is 90% of that. 5 to 10% is government business. So the government is waking up. There is movement, like Ketan said, GEMS integration is one such movement which will enable government also to start participating more and more on this. Coming back to the point, what we've done 75,000 crore last year, that is March 23, same time March 24, we should be doing upward of 1 lakh to 1,25,000 crore. So if I benchmark it to 5 lakh crore, it is at least 20% of the market that we would have solved. But I again repeat myself, we are not financing the delayed payments. We are not letting delayed payments swell up again.
You're here to sort of reduce that 5 lakh crore to...
Yeah, so 5 lakh doesn't become 10 lakh. We are here to ensure that. And whosoever is doing well, whosoever is doing business, he can do better and best out of it. So that's the idea.
Right.
Just to add a data point, because you asked this, from that journey till today, when we look at the unique cities which people log into TREDS and discount their invoices, so it's a digital platform. Right. So you really don't have to go to a bank. You don't have to call up anyone. Your buyer and supplier just have to transact on the platform. People are logging in from 1,500 cities in India, unique cities, maybe more than that, but what I last counted was about 1,500, and getting their invoices discounted. So it's a change which has been adopted in the country, and hopefully it should go multifold from here.
All right. I'll come to you. I have a question maybe about international payments, but I'll come to you. Before that, banks, there are definitely the banks which are private and PSUs, the public banks. All of them have obviously been tried to catch the speed in terms of B2C payments, and they definitely caught up with. Some banks have been sort of ahead of it and all of that, right, over the curve. But with B2B payments, and you being in the space of providing technology to banks as well, what is that you're observing? Especially there is this TREDS platform, invoice discounting, and both of them are not banks, right? So they're completely sort of doing this outside, so-called the age-old traditional banking space, I would say, right? Because it's a very innovative product. What are you observing in the space where they know for the fact they exist not to run technology teams or not to run technology in their company, but to obviously run the bank, right? So what are you seeing with so many changes that are happening on the technology front, banks adopting to it, especially in the B2B space?
So banks today traditionally are interested, in their relation with the enterprises, merchants, but they are not interested in this entire, payment cycle, etc. This is not their interest today. So they are not working for this cause. This is for sure. If you see merchant segment, a lot of fintechs have worked, to get the new merchants in the ecosystem. Today if you see large companies, you will say we have 10 million merchants. If you see a lot of work has done by Paytm also and PhonePe, etc. So, a lot of work has happened because fintech has taken a lot of initiatives. So to help grow this, receivables market, we need more SMEs, MSMEs to come and join the platform. So again, we need a financial inclusion movement in this space also, So we have done financial inclusion to enable individuals, to receive financial services. So similarly, we need, financial inclusion for these MSMEs for receivables market, because only maybe today, less in single digit, I think people are using, this type of platform to get their receivable payments, maybe. But there are a huge number of merchants still. So these merchants are available with payment gateway companies and other fintechs. How we can bring, these are also merchants and enterprises, how we can bring these enterprises, onto the receivable exchange, so that, they can benefit the platform that has got created this side. So today they're using payment gateway and payment solutions to collect their payments from the subscribers, from the customers, right? But, not on the onward side, B2B side. So there is a merchant, KYC is done, merchants are available. How we just, plug them here in this side, this needs to happen, then growth will automatically happen 1000x. This is what, I see.
Yeah, that's a good point. In fact, on that point, Sundeep, do you see that lack of awareness still playing a large part of not adopting it? Point one. Two is, you talked about numbers of 75,000 crores. When you talk in terms of number of SMEs on the platform, what does it comprise of?
So number of SMEs on all three platforms put together would be in the range of about 50,000 to 60,000 SMEs using it. Awareness-wise, I would say awareness has increased multifold, and it has happened through various ways. Government has played a role. RBI has played a very pivotal role. Banks have played a pivotal role. Associations in various regions, PSUs in various regions have played a role. The change has occurred in 2-3 ways. One is a banker side of view, which you asked in the previous question. Obviously, when in the early days, let's say 2017-18, the bankers used to feel that this is transposition of my business onto exchange. Actually, it came out later that this is additional business which they were not doing. They were doing a financing of a working capital of a large corporate, but this is the vendor of a large corporate who's sitting in a small town, and they did not have access to it, and they had to do branch banking to approach him. Now everything is coming to him in the central office via a platform, so this has become additional business for him. So the outlook and the adoption has changed. They did not have a product of reading a digital invoice and making a bid on that, or analyzing and financing a digital invoice. Today the market has changed. One-man army in a bank is doing this kind of business, which is 1,000 to 2,000 crores a month. And he's just looking at the invoice, and that invoice is getting validated from various sources and then getting financed. So awareness has gone amongst the bankers also. However, the lot yet to be done. There are thousands and thousands of PSU bank officials who still don't know trades. So if the financier himself doesn't know trades, then there is a lot of work to be done. Having said that, yes, a lot of ground has been covered in the last 3 years, like I said, and more will happen.
Ketan, to the number that he quoted, 50, 60,000 SMEs on the platform across all trades, right? If we have to take the numbers from the government sources, I think the small and medium enterprises all put together about 3.5 lakh, right? Small and medium enterprises. I'm not quoting the micro ones. That number goes much.
The official figure quoted is around 6.5 crores MSMEs.
That is MSMEs. I'm not counting micros. In the MSMEs, leaving the micros part of it, SMEs I'm talking about, which are about 3.5 lakhs, right? Yeah, it is 3.36. I think probably moved to 3.5 or 3.6 now. So if I talk that number, 50, 60,000 have adopted, can we safely say that for this 50, 60,000, most of them fall into SMEs, or there are also micros that you see? Have you seen such stories, really micro enterprises being part of the system?
See, if you look at the composition of the MSMEs which have got registered out of this 50, 60,000, 95, or I would say 90% would be small and micro.
Small and micro, not on the medium side.
Not on the medium
That's
side.
interesting.
Yeah, so that's what it is.
So what it means is there is a change happening in the last mile.
Yeah, because see, the MSMED Act primarily covers the small and micro. So that is the whole thing. So when it covers, so the corporates are not keen on, getting the medium enterprises coming on the platform. The PSUs also are not keen on medium enterprises coming on the platform. So that is what it is. But you would say that look, it's slowly changing. That people, the corporates which come on the platform and start transacting, they want to do more because they see the rate differential which is coming on the platform, because it's a completely marketplace, a price discovery mechanism. So what a supplier or what a buyer gets on the corporate, gets on the private bilateral supply chain rate is something different from what he gets on the exchange. So that's primarily a difference for them to compel their suppliers to come on the platform.
So what does it take, that 50, 60,000 number, to take to the next milestone? Would it be like a 1 lakh, or what does it take to sort of get into an adoption, what we can say, right, so 10% of the MSMEs are on the platform now?
See, as what he clearly says that look, almost everyone, I would say that look, the ecosystem is completely aware. The awareness is not there. The non-awareness is not there as what it was earlier, 3 years back. But a lot of work has happened in terms of RBI doing a reach out program to the MSMEs, the corporates. The government is also doing it. So there's a lot of focus over there. At the same time, the corporates also doing the vendor management programs. So they call us over there to address the issues over there. But sometimes it's the lethargy from the corporates also to get started. Sometimes the MSMEs also don't want to come on the platform. But once they come on the platform, it's a different story altogether. So every time they would expect the rate of discounting to change. Every time it should be the lesser than what it was quoted last time. So that is the whole thing. So so it all depends on. There's a lot of push which is going from the government side. That how can we get them more and more MSMEs to come on the platform and start transacting.
Yeah, actually, if 3.5 lakh number is the small and medium, 50,000, 60,000, that makes it 15% in any case that are getting served. The volumes are going to double. That's what we are looking at. We have done 75,000. We're looking at 1.25 lakh crore, approximately 1 lakh to 1 lakh 2.5 crore. So the number of SMEs will automatically double, right? So 1 lakh SMEs, same time next year, which would, if 3.5 lakh is static number today, for example, it'll be at least 30%.
As long as they're small and medium. Yeah.
Yeah. So number wise, if you just compare with 3.5 lakh, it'll be 30%.
But there are a lot of micros.
There are a lot of micros also.
Yeah. No, it makes me recall one of the conversations that I had with the core team of the Paytms in 2016, November 8, when Prime Minister Narendra Modi called for demonetization. All the payment gateways went to the drawing boards late in the night at 9:30, and then around 12:30 they came back with a solid plan to sort of. I remember there was a request coming from 1,500 people required by the Paytm to go out and educate people, the vegetable vendors, to how to use. So at the same time, the COVID sort of surged. So see, especially B2C, there are two things that I sort of strongly remember. One was the demonetization, second was the COVID. So is there something that you can foresee, other than, of course, COVID has already happened, and you saw a lot of volumes improving, right? So is there something that kind of a challenge that sort of pushes all of these people to sort of start using it?
So you mean to say disruption brings the growth?
It is, right?
No, in fact, I think COVID has helped, a big way. If you really ask me, I think after COVID only a lot of volume has increased because when we work with MSMEs, liquidity is a big challenge. A lot of companies have shut down because liquidity was not there.
Yeah.
Payment did not happen. So this was a big problem, after COVID, even today also. So liquidity is very important for these small enterprises. And after COVID, everybody realized that, to work, and people have adopted this new system. So I think that one trigger has happened, for trades, because Ketanji said that, it was 2,000, now it is 25,000, right? So it's huge, it is huge, and this is post-COVID. So I think one moment has happened, and it has reached at some level. I think from here onwards, more growth will happen. I think we need to put more, merchants or enterprises onto this platform. This has to happen, and this has to happen. Maybe do it yourself can be one method. Faster onboarding can be another way. This is what we have seen in our ecosystem. How this onboarding can happen, faster. If similar thing can happen this side, I think that will also help.
So actually, lot of regulatory changes are being done continuously by the government, by RBI regulator. So one such thing is trade credit insurance. The regulations are yet to be released. The announcement has been made that trade credit insurance will be allowed now. That could be one such pivotal movement, because it'll bring liquidity, it'll bring confidence to the banks that insurance is there as a backup plan. With its own parameters. So that's one such thing. Second
It
such
started happening already, because I heard insurance companies started sort of adopting.
yeah. So on trades, the regulations are awaited. So the announcement came sometime in January and February.
Right.
Now the regulations are awaited. The moment the regulations come, it should start. Other such pivotal thing is what Ketan just mentioned, is the GEMS integration.
Yes, integration.
Right. So like I said, 90% of the business today is non-government. Now, if the government business starts, automatically the percentage of 10%, which is today government, should go multifold up. So these are the two in short-term pivotal moments. God willing, no more coronas.
Thank you so much. I think we'll have one last question. Maybe this is little tangential, but how many times you guys both have been on the same panel?
Wow.
I think this is a third panel, I think, right?
2022 third panel.
Yeah.
Right.
Sorry, 2023 third panel.
Okay. Off the panel, how do you feel the competition?
You would have seen many of our photographs together.
He drops.
That's why I'm saying off the panel, how do you feel the competition?
The moment we turn around, we start bitching.
I take the liberty to take a drop off from him in the car to a common place.
That's good to know. But I think the insurance companies point you mentioned. But do you see some small? I mean, whether small or big, either the changes like that, and being a platform, which is obviously a lot to do with regulation around. How does it feel for you, right? When you have to wait for things to happen and nothing is in your control, and you just have to wait and watch. And it's I would say it's not like a typical startup sort of a mode that you can run at the pace which you want.
It's a big question. And
no, because that's one of the large factors, right, in adoption, especially in this space.
So you can say we are a regulated startup. Okay, it's a new name I'm trying to give you. And a regulated startup has its own benefits. I have cribbed a lot in the early days of 17s and 18s and 19s because you have to wait, kind of a situation, for many things to emerge, to change. Having said that, today, post-corona, post lot of water down on these startups, lot of regulatory changes which have happened, the adoption by the banks of the trades, it's essentially a blessing also because we are regulated. Because there is someone who is keeping a check and an eye on whatever changes are getting adopted. They are getting adopted in a manner which is maintaining the semblance of compliance. So all in all, I've learned to say that it's a win-win game. Wait and watch, but it's a win-win game.
Ketan, you?
I would say that, look, we are making things happen. because we have a strong, all the three exchanges have very strong sales team. So it's more or less, when you want to make things happen, you have to reach out to the corporates. So it's something like, when you're talking about banking, it's like a transaction banking team, that where you have to go and talk to the corporates multiple times to see how they get convinced. Because the moment the corporates get convinced and they come on the platform, there is no looking back, because then they want more, how they can increase the volumes on the transactions or more. But it's just that we make it happen. I would say that, look, in the last 3 years, whatever the developments have happened, it's not that just that we were sitting over there and waiting for the things to happen, but we took the things in our control and how it happened. And there was a push from the government also. At the same time, the regulator was also asking us, what are the things we need to do? That, how can we increase the traction? And there was a huge dialogue on what are the things we expect from the government, the RBI, and we have almost a monthly dialogue with the MSME ministry as well as the RBI regulator, because very keen. And you would be surprised that, I'm myself surprised that every quarter now when the MPC comes in, there is a mention about, at least in a year, there would be at least 2 mentions about threats. Very clearly from the RBI's governor statement, and you would have seen it in the last, in January also. It's a pleasant surprise that, look, now the governor also started noticing it. So because that the platform is making a change. So I would say that, look, we are making things happen. It is that we are reaching out to the corporates, reaching out, convincing them that they have to come on the platform, they have to get things started, and things are happening. And very clearly, the regulator is also supporting over there. So and the government is also saying very clearly that, you have to do the things over there.
So Manoj, you got recently the license, right?
Yeah.
And especially in the B2B receivable space, how do you see that? I mean, you're one of the very few companies who got the license.
आपने पहले ही डरा दिया उसको.
So, yeah, I'm sure you heard and then you've been observing the trades platforms also, but how do you see this as a big step for, bringing in a difference in the B2B receivable space?
Yeah, so we have recently got payment aggregator license from RBI. So all these years, we were regulated but indirectly regulated. So now the regulation is direct to us, and this is challenging. It is not easy. There is direct communication between RBI and Lyra, and now they see Lyra as a bank only. This is how they see. The regulation that is they normally try to put on banks. They are putting all those regulations on Lyra also now. So and we have to do that. There is no choice. So we have started doing that. So cost is increasing. Cost is increasing drastically. Manpower, dedicated manpower we have to put. We have to put MLRO, AMLT. So a lot of things we have to put on the information security side. A lot of upgrades we have to do, reporting. So a lot of work has increased. The problem is that earlier we were little relaxed and our focus was more on growth. But after this license, growth is is stopping somewhere, and now our rejection rate has increased, not because there is some problem, only because there is a fear, only because there is some fear. But all these years there was no problem, we had no problems. But only because of fear, the rejection rate is increasing. But merchant is good, enterprise is good, everything is fine. They're doing regular business. But due to audits, KYC, so there is a recent regulation on KYC also. Upgraded master direction has come in, which is again putting a lot of additional burden. So earlier. Banks were, mandated to do CKYC for their customers. Now, they are also saying CKYC for merchants, in our ecosystem. So this is huge work now for us. So which is in a way not very good. We were able to grow because flexibility was there, and because of that we were able to onboard a lot of merchants, do it yourself, etc. We were able to do. So this is creating some problem. But there is no choice but to follow this. Yeah.
So you heard the answer, you wanted to listen. But having said that, these are the early days, I would say, Manoj.
Yeah.
You will find your way.
So actually things are okay. So there is Maybe we will not grow for a few months, but after a few months, maybe we will grow faster. Yeah.
Definitely. See, without a regulation, I don't think the B2B receivable space is going to change at all.
Yeah.
Yeah. Congratulations on the license.
One comment is there that look, you never find the regulator. I mean, earlier it was a scenario that we used to find the regulator was an inspector Raj kind of thing.
I think it's a
But
big change.
but it has changed. The proactivity is there. The regulator is proactive.
Of course.
And that's the best part. And you would be pleasantly surprised that even 3 months back, I think last month, right? We had a conference with the regulator, and they all the payments are payment. I mean, many people in this auditorium would have been called over there.
Definitely.
As what are the things we need to do? What is the regulator's role? What are the things they want themselves to do?
Absolutely.
And whatever. So
The inclusivity is very
inclusivity at the same time, So just to tell you that look, compliance is one part of it. It's business. When you want to do the business, you have to be a
Absolutely.
responsible,
Absolutely.
compliant individual.
Absolutely. As that bell gets, I know, just saying 5 minutes more, but with the concluding thought that I'll probably leave the panel to everyone to ask questions. We run a platform which is a credit to cash management. We keep interacting with a lot of SMEs. I think today when we interact with many of these small entrepreneurs, one of the biggest challenges that we keep hearing is the factor of trust and accountability. There's a small story that I tell you. There is this textile manufacturer out of Surat. During COVID, he had difficulty in sort of sending the goods out because every time people travel from different parts of the country to Surat and selects the goods and sort of packs them and then courier them or whatever, send in a transportation. The logistics is sort of taken care in a different manner. And then they pay cash and carry, right? But in the COVID, the things have been very different. Now, the people cannot travel point one, but this guy obviously had got a video camera and then WhatsApp and everything, so he was showing, and then people were selecting. These are all wholesalers and dealers, selecting maybe hundreds and thousands of different cloths. And then all is done. Now comes to payment. Now, what number of days it takes to that place? 7 days, 10 days, 4 days, 5 days, whatever, right? And this guy is not ready to pay the money until the product reaches. Now, yes, the guy in Surat has to take the risk. The fact that in the B2B space, it's the cash and carry is not always possible. And most importantly, the factor of trust and accountability comes into the picture. That's where the whole payment comes into. So it's okay. Now, let's say Surat guy has taken a risk and sent the product there. And then now it is as if the buyer or the dealer sitting in Madras has no consequence to pay in time or the moment he receives the goods at his place, right? I think there is a long way still to build the trust and accountability. I think there are change makers here who have been part of pioneering the receivables space, change forever for the country. And very soon, I think I strongly believe this decade is a B2B tech and SME tech decade. And then I strongly see probably 3 years down the line from now, I'm not being too positive, but for the next 1 year or 2 years, but at least by 2026, I think we should be able to talk about making a large difference. We've already made I think, a tremendous inroads into making a difference. Hoping to sort of be part of the journeys that you guys are going through, and as we all in the same space, but we keep interacting, but we never actually get an opportunity to discuss so much, and thanks for the organizers to be putting us in this panel. Thank you so much, and I'll keep the floor open for questions.
I'm Sundeep here. Hello. Hello. Yeah, I'm Sundeep here. We discussed about invoice discounting and some delayed payments also above the payment terms. So is it synonymous to the invoice factoring which we do? Is it the same thing or it is something different?
It is.
It is same thing.
It is, yeah.
Thank you.
At the back.
Hi, Shraddha here. So, very interesting conversation so far. Thank you for such a nice session, first of all. My question is around regulations and the loopholes that non-regulated startups usually try to find and make their products sort of frictionless. So, recently I've been discussing something with a friend who works with one of the regulatory bodies. They told me a very interesting observation that they have come across. If the loophole exists and the penalty is something the startups can get, like they can pay for it, they're preferring to do such things that are like they don't have specified penalties, or the penalties are not that high, and then it leads to some or the other kind of, let's say, fraud, or there's a potential of things going wrong. So what's your take on this from a safety standpoint, or how could it affect the reputation of overall fintech and like all these things, given the intensity of frauds might just increase a lot?
Okay, I'll give a banker's answer. So look, I have been a banker, so it is always better to be erring on the right side. So that means you have to be right on the compliance side, in the sense whether you're a regulated entity or a non-regulated entity, whether you can pay the fine or not pay the fine. Because it's not only about the company, but tomorrow the company can lose the capacity to do the business. So it's not about getting away with it just by a fine. Tomorrow the regulator can shut down your business. And it's a whole lot of reputational risk also over there. Because just imagine that you think that you're doing something right, and thinking that I can do it's something which is wrong or whatever. It's a loophole over there, and I can get away with a small fine or with a rap on the knuckles. But that is not the true story, because today you would not have heard about banks getting fined, which was totally unheard of about 1 year back or 2 years back. They not only get fined, but today, the RBI has a regulatory authority to shut down the business. So in fact, that's how the digital lending platforms and other things are coming under the regulatory purview. And we, being a regulated entity, we are always feel that it is much better to stay within the regulated thing, because you get a rap on the knuckles from your regulator, which is not something which can also lead to your license being cancelled very clearly.
Yeah, and my point here is that for startups, if there is a loophole, you can do a product. Product development is fine, but before you commercialize your product, get it validated and follow the legal framework which is existing in the market. Before you commercialize. But product development stage, you can try to because this is what you try to do. Whatever there is some use case or there is some gap, and you're trying to create a product around that. Pilot is fine, but before commercialization, it needs to get validated from the legal framework.
Yeah. Plus, if a startup develops a product with this premise, we've seen few examples in the last few years. Eventually, the product has to be shut down. So nobody would start a product with that premise. Should not start a product with that premise.
No, just to add to that, let me wear my hat. I was a former bureaucrat before I started this, so I was in the policy making tables. Also now run a fintech. So I was part of making a fintech policy and innovation policy for a couple of states as part of the Startup India. So when we were making any of these policies, especially for the startups in the fintech space, I was also part of the airspace drones. One of the first and the foremost 4-point value of the entire policy is that first one is frictionless usage of the end beneficiary. End beneficiary can be anybody. It could be a direct consumer or B2B, right? So it's not that the regulation or the government believes that the startup should follow the certain guidelines to be aligned and to make the end beneficiary difficult to use it. So it's always, the government also believes in it. It's all about collaborating. The governments are, like Ketan is pointing it out now, the governments are very open to collaboration in terms of how to find the solutions together, right? So that's where you see when you talk about non-regulated startups, Startup may be non-regulated, but if you see the whole larger framework, it definitely falls in the gamut of the policy, right? So you can't get away with it. But the policy sort of protects at the same time with an intention to make sure definitely the frictionless part you're talking about, that's always the top most agenda for any policy. Yeah, thank you.
Thank you so much for joining us. Thank you to all the speakers.